Hi everyone, and welcome back for another deep dive. Today I'm cutting straight to the chase. Instant payments are no longer just coming down the pike, they're here and quickly becoming a critical determinant of success for financial institutions. In today's economy, speed is currency. We live in an on-demand world where everything from food delivery to entertainment is available 24/7, and payments are no exception. The expectation for money to move instantly 24 hours a day, 7 days a week, 365 days a year is the new normal. In fact, I was just reading a Payments.com intelligence report the other day, which found that 94% of account holders who use instant payments report a high level of satisfaction with their financial institution. That's a significant statistic that financial institutions can't ignore. But account holder satisfaction isn't the only reason financial institutions should be prioritizing instant payments. Let's dig into it, shall we? Fintechs are now in direct competition with financial institutions. Let's look at some data. In 2024, nearly half of all US smartphone owners are using proximity mobile payments, and overall digital wallet usage continues to outpace traditional methods. This growth is largely fueled by global wallets from tech companies like PayPal, as well as the vast amounts of instant peer-to-peer transactions flowing daily over Venmo and Zelle. These companies have normalized instant P2P payments for millions of consumers, while Square and Stripe have made instant payouts a standard for businesses. Financial institution adoption of instant payments in the US has skyrocketed in the past 2 years, particularly with the introduction of the Federal Reserve's FedNow Service in 2023. As of early July 2025, over 1,300 financial institutions are already live on the FedNow Service, with 95% of those institutions being small to mid-sized banks and credit unions. Furthermore, we're seeing strong evidence of a multi-rail strategy. That's one of the questions I receive frequently from our members. Do we go with FedNow or RTP, or do we go with both? A recent Payments.com report indicated that 58% of US financial institutions that enable instant payments are now using both FedNow and RTP. Add to that, studies show that financial institutions that do not implement instant receive along with instant send risk losing market share to competitors who do. Expectations for both businesses and consumers have been fundamentally reshaped by this on-demand economy we were discussing earlier, particularly when sending payments via Venmo, Zelle, or Cash App now seem commonplace, from everything from unexpected emergencies to daily cash flow management. For businesses, particularly those small and medium-sized, instant payments means instant cash flow, better vendor relationships, and faster reconciliation. This rapid evolution of account holder expectations, coupled with the fact that real-time payments market is projected to reach $1.79 billion by 2030, means that banks and credit unions that do not embrace instant payment capabilities, including both sending and receiving, risk significant market share loss and increased account holder churn, as individuals and businesses will naturally gravitate towards providers who deliver the speed and the convenience that they now demand. So, how can your financial institution not only embrace instant payments, but effectively compete with the agility of fintechs? If you haven't already implemented the FedNow Service or RTP, both sending and receiving, that's step one. But don't just check the box. Look for opportunities within your existing account holder base for high-impact use cases like earned wage access, instant bill pay, or expedited loan disbursements. Focus on the why. For consumers, it might be avoiding late fees or managing unexpected expenses. For businesses, it's about optimizing cash flow and supply chain efficiency. Tailor your offerings to these specific needs. Leveraging robust API strategies to connect with third-party providers, integrate into accounting software, and create embedded finance experiences is key for financial institutions to compete with the seamless integration provided by fintechs. This allows you to extend your reach and offer services where your account holders are already operating. The speed of instant payments demands equally fast and sophisticated fraud detection. Invest in AI and machine learning tools that can help identify suspicious activity in real time. Clearly communicate the benefits, showcase diverse use cases, and make the experience intuitive within your existing digital channels. Showcase that your capabilities rival or even surpass what is offered elsewhere. And think beyond the transaction. Instant payments open doors for new revenue streams and value-added services. Personalized financial insights based on instant transaction data. The opportunities are vast if you think creatively. There's no question that the payments world has changed and that instant financial transaction interactions are here to stay. But by proactively investing in instant payments capabilities, understanding the why for your account holders, and then leveraging the power of modern technology, you can not only meet but exceed these expectations, driving that remarkable 94% satisfaction rate and securing your role in the future of finance. Thank you for joining me today for a deep dive. I'll see you next time.